All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for, let's see, October 4th, 2021. So I wanted to share this picture of one of my favorite players. Well, they're all my favorite players. This is Jillian Schiffer, and she is a senior at West Point, and she's going to be commissioned a second lieutenant in the United States Army at the end of this academic year. And she played for me when she was 8 years old uh, with her older sister Annie, who was 10, and she played on our U10 team, 2 years young, but she was amazing. Real force of nature. We called her G2 because we had two Jillians, and she was just a ball of energy. Well, one of the things that we did is use the words of power phrases to start programming our girls for success and how we wanted them to play the game. Things like slow is smooth and smooth is fast. And we taught them the big five of our club, which are these. Uh, the five important things: play hard, have fun, support the team, love the game, respect the other team and ref. And we said that at every practice, and we reinforced it at every game. And we scored ourselves on the basis of how well we thought we were doing on those five things. We didn't care about the scores, and we didn't care about the standings. We wanted to do those five things, and we reinforced them all the time. We reinforced things like, how do we clear the ball? Widen up the side. Do we ever cross in front of our goal? No, never. Inside goal side, and beat one person back. I mean, you had to hustle so that you could get in front of one other player on the way back. So you just had to beat one player. Well, 15 years goes by, and now she's graduating, and her parents asked all her coaches to send a little, pep talk and to put together for her last senior game. They were going to surprise her, and so I did, and they laughed, and as they remembered, man, we still have those phrases burned into our head. We hear her using those on the field: widen up the side, inside goal side, slow is smooth and smooth is fast. I said, yeah, those power phrases program your mind to achieve certain things, to play in a certain way, and the power of those power phrases really matters. It works that way in trading too, by the way. Well, the other funny thing was that I'm putting together some leadership lessons for all my players and their parents, and part of the Leadership Academy program I'm building out. And I'm going to make that available to the trading community as well, as part of a whole slew of courses that we're putting together on mindfulness, emotional intelligence, creativity, systems thinking, craftsmanship, how to build good teams, the mastermind effect, all the things that I think will support people in developing robust solutions in their local area, whatever it is that they're working on. And so I got the soccer players sending me their little lessons learned from a life of soccer that they learned in our academy. So Jillian's going to send me some notes. And then Paige Kauna, who was a player that was a contemporary of Jillian, completed her undergrad work at Ohio State University a year early, graduated with honors from Johns Hopkins University in a program of international relations. And she's just started work with a international task force to combat human trafficking in the world. And I asked her to send me some notes on what she had learned from soccer that helped her become such an amazing success in the world. And the first thing she said was, Coach, when you taught me slow is smooth and smooth is fast, I've lived my entire life that way, and it has been a trustworthy guide in everything that I do. And she's going to go on to do amazing things in the world. And so I'm no longer surprised when the words that we use to frame our world make a huge difference in our lives and in the lives of the youngsters that we're developing. The importance of the Leadership Academy is that we're helping prepare kids to become successful 20-year-olds through soccer. And then those lessons are going to make them successful beyond, because the world belongs to 20-year-olds as they're entering their college, years, figuring out what they want to do. They have this world under their control, and we're just caretakers of it. And so we owe them a better world than what we're giving them. And so that's what's motivating me to work hard and prepare these leadership lessons. But I wanted to just share with you the power of words. And I talked a little bit about that this weekend when I gave the little impromptu speech on I feel just like a grain of sand. I'm only a grain of sand on the beach. And if you haven't read that or listened to the video, I'd encourage you to think about it. I've gotten some good feedback from the crew on that. But those small phrases really do matter. For instance, when we say failure to fail further is information, that's an important phrase. That's a power phrase. When price is failing and then it fails to fail further, in other words, it stopped failing, that's information. It hasn't started to go up yet, but failure to fail further is a power phrase. Its counterpart is failure to follow through. Failure to follow through. When you expect it to move and to continue and then it doesn't, it may just be stalling, but that's information. So both of those are premonitions of possible reversals after significant trends that got your attention. And you expect it to fail further, but it doesn't. That's failure to fail further. And then if you expect it to follow through because of reasons and feelings and hope, and then it doesn't, failure to follow through is a signal that your sniper needs to be activated and that you got to be ready to execute the 2-hour battle drill and be relentless in your focus at those critical states. Critical state is a power phrase. I'm looking for critical states. A higher than normal probability of a larger than normal move in either direction in a shorter period of time with favorable reward to risk ratios that are manageable. That's the critical state. That's what I'm looking for all the time. That is a diamond of an idea. Just like a little grain of sand when you look at it closely enough. Each of these are unique crystalline structures that have been rendered down to their indestructible essence. The entire mountain is contained inside each little grain of sand, the mountain that gave it birth. And it was the forces of air, earth, fire, and water that ground it down to this polished form, that absolute essence, the indestructible self. Now, if you look closely at that one in the middle, you can see the universe through that, looks like a little wormhole. Isn't that beautiful? I think about the space in between those two. What is that deep connecting dark matter that's that collective unconscious that holds all of these things in its loving arms? That's what I think about. So let's get started. So today just continues that downward slide. We talked about Friday possibly being window dressing. Today was certainly, this was a window dressing day. And this has been one continuous downward slide after the tiny little doji, which was preceded by a pretty nice little rebound, which followed this horrific downward slide, which was preceded by a little doji. So each one of those dojis and inside days represents an important moment in price action. Each one of them was, the first one was failure to follow through. It got as high as it got and then couldn't follow through any further. That is failure to follow through, and that's information. And then it sells off harshly, and then it failed to fail further, and then that nice rebound, which rewarded all of those channeling and overreaction trades from 2 weeks ago. And then it terminated in this little doji, and it was already rolling over. And there's a 1, 2, 3 exit. But that doji was a signal, a warning of failure to follow through. And so now we come down to last Friday, and that was failure to fail further, but it was stuck here in the middle. And we said, now, whichever way it breaks out of that yellow zone, if it breaks higher or breaks lower, we'll be ready to trade in either direction. And today, we had the slight gap down and then the harsh sell-off, and made a new 10-day and 30-day low. And that was perfectly reasonable. It would have been perfectly reasonable for it to have done what it did, Friday, having a second day up. It could just as easily have moved this high. And that's what we mean by a critical state. And that is a moment like this little yellow zone in here at the end of a downward slide testing a double bottom, where we have a higher than normal probability of a larger than normal move in either direction, where the reward is larger than the manageable risk, with an equal probability-ish of going in either direction, and with a manageable trade. And so when we are at the height of chaos like this, we are rewarded for shorter-term trades. So before we get into the trades, I want to show a chart we posted yesterday on Twitter, or it was a chart on Twitter, I should say. Sorry. And we labeled this one as a perfect trade frame. And what we said was in our note, and hat tip to Bob for posting this for us. And this is exactly what we said, that Twitter, and this is on a 2-hour chart, and Bob had highlighted the higher low. The winter had turned to spring, and he noticed the PSAR flip had just happened. And we said, hey, 2-hour chart on Twitter. It is a perfect critical state poised for a large move in either direction in a short period of time with equal probability, where the reward to risk ratio is favorable in both directions, in a liquid volatile stock, that should read, in a liquid volatile sector. When the market and sector are both poised in critical states themselves, it's so good it is radioactive. That's what we said yesterday. And this is what we got today. So Twitter opens So this is yesterday. The Z3 pinch had occurred, that sideways quiet channel just above the VWAP. So we take the Z3 to Z3 box when there's no directional activity at the close of the previous day, or wherever the tightest pinch was. That's what the noise is. When it's not making a directional move, the Z3 to Z3 pinch sets up a noise box. And then it gaps down, so we take that noise box, and it's starting to sell off, so I hang that from the high of the day, and here's the bottom of it. And on the fourth bar, on this gap down and the VWAP crashing, and the everything else crashing as you would expect, I just go short with a stop at the red line. Very straightforward. This is, we call this visual box trading. It's a form of hybrid frog, and it uses the previous day's information to set up a favorable frog. Now, when you take the day trading course, you learn about the frog being impervious to the previous day's information. So you don't have to do any work on the previous day if you don't want to. But if you want to, you can make a hybrid system out of that, like we've just done here. It takes a little bit more work. You have to find optimized critical states and do a little bit of work. But if you're willing to do that work, spend a little bit more time because you can, Now you get a nice gap down on the day when we're expecting or wouldn't be surprised by a painful sell. And now suddenly this thing starts working. And now we're in the money. You know, if you're this far and you're 3 bars in the money, would I be offended if you did this? Watch. When your stop is right here, and then you get 3 bars in the money, would I be offended if you just decided, you know what? I'm just not going to lose any money on this trade. I'm just going to move my stop to there. I've got an R in hand and momentum. Is that wrong? That is not wrong. Here's a location where it failed to fail further. I take a look at this and I say, you know what? I'm going to underline that in blue. I've got almost like a little doji action there. Would I be wrong if I just did this? No. And now I get 2R in hand. Come at me, bro. What do you think? Could I live with that? Yeah, I could. So if I just move my stop to there, I'm not offended by that. Might have got me out. How many times a day will I take that trade? Every day. On how many different symbols? All of them? All of them that set up in a critical state on the day before, in a liquid stock, in a liquid sector, when the market and sector and the stock itself are all in critical states, and then it gaps down and starts failing? Psh, no brainer. If you are a little more relaxed on this trade, you might not have gotten out there. I should actually show that as a green dot because you got out. But you could get short again right here. When it rejects, when you have this high and it goes 1, 2, 3, you can get short right there and start a new trade. And get out when it does the RLXD. And that gives you an SSC entry. So now I have 2 trades that are possible. I could have made this trade and this trade. If my exit had been a little more relaxed, like the VWAP, I might have just done this. I might have just used the PSAR and gotten the same exit. And that's about a 1, 2, 3, 4, a 4R trade to the yellow dot, or 2 2R trades if I break it into 2 pieces. All set up by the critical state trade in Twitter on a 2-hour chart and then executed on a 1-minute chart right from the get-go. All you got to do is find the mover. So I wanted to share that idea with you. Okay. Meanwhile, back to this market. So where are we right now? Well, we are below yesterday's close, and we are at what would have been an all-time low anyway, at 428, and it closed weekly, and we are beyond Z2 and ready to fail further. Where could you immediately get short? I think you could get short right here. You could get short at the bottom, at the daily low, or you could use a form of that hybrid frog that we just showed. Am I interested in the long side here? Absolutely. Why? Because it's past Z2. So this thing could very easily turn into something like this. So I'm going to take that tight little box. I'm going to scrunch it down even further. And I'm going to say if this comes back above, I'm going to get in a little closer here. I'm ready to be short if it violates below that yellow box. I'm ready to go short. And I'll be ready to go long if it breaks above the Z2 line. And I'll be ready to look for a return to the daily high, to the Z1, and then all the way up here to the Bollinger Band mean. Look how far away from the Bollinger Band mean we are. The Bollinger Band mean is way up here at, 444. And we could be getting long, theoretically, at 429. So that's a $15 move. And my manageable risk box is about $1.50. So that's a 10-to-1 reward to risk. And if I can manage intraday $1.50, that's 150 points in the contract. And so if you were trading 1 minute bars, you could be even tighter than that. So that's certainly within range. Now, if I'm being honest here, this region here in the yellow box around 435 to 436, there's a lot of resistance in there, as you can see from price. So if this starts moving out and then it were to get up to the edge of the dragon and then start to retrace, I would cash that tomorrow and be happy for that nice move. Can it move that far in one day on the long side? That's how far it moved in one day before. It could move that high and farther. Over here it moved even further. So those are all well within the normal range of an intraday move. Could it move that far on the downside? Well, let's see how far it moved today. The negative move was that big. Yeah, so it could move tomorrow out of here. It could move all the way down to the 7.5% sell-off. Here's the 5% sell-off, and here's the 2.5% sell-off. So we're definitely in correction mode, and there's a lot of people nervous in the service. But we're also going to see that sets up some interesting counter trend trades back towards the Bollinger Band mean. So that makes us perfectly positioned short term in a critical state that we can take advantage of with our shorter term time frames. This is not a time to be swing trading. This is a time to be exploiting these shorter intraday moves with no overnight risk. Like, I don't want to work really hard and earn money intraday and then leave that position overnight and then get smoked by an adverse gap. Ugh, that'll make you grow old prematurely. So I don't want to do that. Let's keep it easy. Slow is smooth, and smooth is fast. Could you learn how to trade that way? You could, and you should. Start with one pattern, frame it, practice it, day trade it with paper trades. Then when you're ready, trade it live with one share so you feel what it feels like with skin in the game. In my view, the best market trading simulator is the market itself. The best simulator of live trading is live trading with one share. And if you're like me, you'll feel the skin in the game and you'll get fair fills and see what it's like to execute under real conditions, but with only a couple dollars at risk. If you did that 100 times, and you lost every single one of those trades with $1 at risk and $1 commission, it would cost you $200 to learn if that pattern was good for you. That's a pretty good investment on a pretty good system. So if you got a system that appeals to you, I'd rather do that, 100 trades forward tested with one share live, than 1,000 trades of back testing. Back testing in a simulator doesn't tell me anything because I got to live with the consequences. I want to see what it feels like going forward in real markets. That's the only way I know to do it. All right, so there we are. All right, let's take a look at the sectors today. Luis, well, I'm firing up. Luis asked me, um, what is the background logic for slow is smooth and smooth is fast? And this applies to every skill that I've ever tried to learn, whether it's in the Army, in judo, in jiu-jitsu, in wrestling, in hockey, in basketball, in baseball, in trading of every type. That our skill begins to break down at whatever skill level you're at. Your skill begins to break down as you get towards maximum speed of execution. Let me see if I can. There's a chart I want to draw. So as speed increases going this way, and then your skill at executing it flawlessly is increasing this way, there is sort of a region of slow, normal, fast, and maximum. Okay? So let's just call that slow, noticeably slow, something like normal speed, as fast as you can reasonably go, and then your max. And when you're going at normal, and so this is, there's some kind of breakdown in here. When you're going at normal speed, you might be in here with a certain amount of errors, but you can generally execute. When you go a little bit faster, your skill level comes down to here, but because you're going faster, you can sometimes get past a player. So if I'm player X and I'm going against player Y and I have this lane to go through and I'm trying to get to the goal, right? If they didn't move and I could just slowly go around them, I would never go out of bounds and I would never lose the ball. So if I go really, really slow, I just walk past them, I'm good. But they actually have some side-to-side motion. So as I start making this move, they are starting to close that gap, and now if I go slower than them, they stop me. So I can't just... I'm very, very skilled when I'm slow, but it's usually not effective because they can react. So I have to be faster, and I can accept the decay of skill a little bit because it gives me a competitive edge. If I go as fast, if I go at the near top speed, then I'm going to get past them more often, but now I might lose the ball out of bounds or lose the ball to them or lose the ball and it goes out of bounds this way. But I get past them. So then if I go at my absolute maximum, this curve is way down here. That curve descends like this and then just drops off the chart. So when we are what we're trying to do now is improve our skill level in this region up in here. What we're trying to do actually is learn to play fast and then make fast the normal speed. So I can improve my foot speed and I can practice dribbling when I'm running fast, and then eventually that becomes the new normal, and now my normal is fast, and now I'm getting better because I'm not locked into those. So what I want to do is engage in deliberate practice where I am executing perfectly. So when I'm slow is smooth. I can be very, very balanced and perfect control and perfect muscle memory, and I'm not inducing any mechanical errors into my technique. And then I can, once I am very smooth, I can increase slow a little bit, and then in practice, I'm going slow a little, and I'm smooth a little bit faster, a little bit faster, a little bit faster, but always concentrating on being slower than I think I have to be. My skill level will go up asymptotically. And then when I start adding speed to it, yeah, I get some skill decay, but because I started at such a high level, I have a competitive advantage when I am faster. What will happen when you really concentrate on being smooth is that your speed will increase without even trying. And so when we say slow is smooth, that smoothness becomes fast naturally. And you can extend your little skill level into the normal range where it's a little bumpy, but you're already operating at a much higher level skill because of your emphasis on going slow. So when we do the bar by bar, we're not locked into time. And what we're doing is we are concentrating on perfect execution. To see what that feels like and to groove that swing, to groove the skill. And then we want to grease that groove with endless repetition, muscle memory, automatic behavior, feeling the feelings, and then trust your feet. That works in soccer, it works in judo, jiu-jitsu, and trading. I will tell you, everybody who has gone through the bar-by-bar trading in public is trading at a much higher level of proficiency noticeably. Ken H., Luis, you've experienced some of that. Lisa has done it. I've done it. Everybody I've trained in that way, in every sport, every skill. That's the logic behind slow is smooth and smooth is fast. Concentrate on excellent technique by going slow and mastering the skill, and then the speed will come. And that's what you do in trading, by the way. The way to get faster is whatever you find out, whatever speed you can manage comfortably. And we're going to see an example of that with Luke tonight. So let's suppose that I have a 10-minute chart, a 5-minute chart, a 3-minute chart, a 1-minute chart, a 300-tick chart. And I take a standard pattern and I'm trading on the 10-minute comfortably, and I want to get faster so that I can get in front of that 10-minute chart. And so I try deliberately to go to the 3-minute chart. And it feels, oh man, that is too fast for me to handle. I can't make all those judgments in time. And you practice and you pray. It's just not coming. So then you just dial it back to the 5-minute chart. And the 5-minute chart is so much slower than the 3-minute chart. There's 2 extra full minutes. And then you find yourself able to execute comfortably on a 5-minute chart. And now you're getting twice as many opportunities on the 5-minute as you did on the 10-minute. Aha. By going back 2 and then up 1, you actually went from 10-minute to 5-minute. Whereas if you went from 10 to 5, it would still seem too fast. So you overtrain that with a smaller position size. And then you ease back into the area. So you have almost like these regions where you can be very slow and then noticeably fast and then come back to the new normal. Well, when the 10-minute was the normal, 5 minutes would have felt fast. So you overshoot that to 3 and then ease back to the new normal of 5. And so you progress in that way. And then what I would do is go to the 5. From the 5s, I would go to the 1s. And then the 3 would feel very easy. Could you go from 10 minutes to 1 minute? Yeah, that might be too fast. So your mileage may vary. But that technique, relentlessly applied, is how you reduce your time frame exposure. And then you can train by going slow and being smooth until you can make a smooth decision cycle. So if we think about the John Boyd OODA loop, which is observe, orient, decide, act. That's the mindset and the process. Observe, orient, decide, act. That's called the OODA loop. of John Boyd. He was a fighter pilot, and this has become well known and adopted in decision-making circles. We can observe a pattern, orient to the appropriate set of rules, decide on what to do, and then act. The faster we can make those decisions, the greater advantage that we have. If we can't go through all of those cycles by the time the next bar forms, then we are out of sync with our time frame. And so we have to either speed up our cycling or go to a longer period of time. There's an advantage to the shorter time frame that you can go to because you get more good decisions made faster. If I'm good at decision making, I want to make as many good decisions as I can because I get a little incremental advantage on every decision that I make that's good. In the same way that if you have a positive expectancy system, you want to trade that at a low enough level of risk so that you can take every possible signal so that you get the expectancy of the system and not get conflicted by the noise or friction. Well, by learning how to improve our OODA loop, our decision making, by learning how to require just enough information to make the decision, I don't have to learn everything. I just have to manage the minimum mission essential information. What is the minimum amount of information that I need? Minimum mission essential information in order to make a decision. That's the diamond is a decision, yes or no. What's the decision I make? So by reducing my inputs to the minimum required, like for me, that's getting rid of the candles and the colors and just going to the bars. And now I just use the simplified RL10 and the Baby Dragon instead of worrying about the price bar. So it's even less and less information required to make a good decision. And so by concentrating on those things and emphasize being slow and deliberate to build the muscle memory, you can then become smooth and orderly in your decision making. And when you're confident on that, now you can speed up that cycle, and then that smoothness will help you become faster without the loss of skill. That's what we mean by deliberate practice. That is what instructional coaching does. The entire literature on instructional coaching has to do with taking a process where you have some kind of process P that you want to improve on and breaking it down into its components analytically and then improving each one, getting rid of the waste and streamlining your production system, whether it's to make a decision or to make a part or to take an action. Instructional coaching is how we learn how to do process analysis and improve the value add of each little component, and then the resulting decision-making process is improved. So, slow is smooth, and smooth is fast. And that's what we learn from soccer, judo, jiu-jitsu, wrestling, combat command, trading. Okay? Not sure where all that came from, but it felt like it was time to cover that. So back to our regularly scheduled program. I see Brian White's here tonight, jumping into the deep end on the foundations course. This is day one for him, and he starts off with this. Welcome aboard. All right, let's take a look at the 6 sectors. Yeah, you may have gotten the value of the whole workshop right there, Brian, if you internalize that. All right. All right, so the SPY was, let me get a little closer on this one. Take a look at our 6 primary sectors now. So the S&P was down 1.3, emerging markets was down 1.47. The Qs were down 2.10, and that was the biggest underperformer of our 6 primary ETFs. The Dow was a little bit better. It was only down minus 0.9. The Russell 2000 was down 0.9. Treasuries were the best performer of those 6 indexes. It was down a quarter. All right, let's take a look at the things that were worse than the S&P, because I think that tomorrow there's a chance that they make a real run at pushing this thing low for one more panic sell. So we had blockchain down 1.5, S&P Tech down 2.3, biotech 2.34, the FANGs down 3%, and they're getting slaughtered in Congress too. Marijuana 3%, Brazil 3%, lithium 3.25%, moonshots 3.5%, Arc Innovation 3.5%, Arc Genomics 4%, Clean Energy 4.7%, and then the worst companies were down. The targets. Squarespace was worst at 5.5%. Virgin Galactic 4.6%. PayPal 3.6%. Apple 2.5%. Robinhood 2.3%. Microsoft 2%. TX, the steel company, 1.9%. So when you see both Apple and Microsoft worse than the broad market in the same day that tech was worse than the market, that's telling you there is no love. There is no opportunity buying in there that's trying to get things on sale. This is a market that is people are pulling their profits out while they still can. And we had a broad base of selling in multiple sectors. All right, let's take a look at the upside then. Sectors that were better than the S&P. Mexico 0.9, finance 0.87, consumer discretionary 0.8, commercial real estate 0.67, materials 0.4, staples 0.3, lumber 0.26, agriculture 0.2. The other lumber cut was flat. So now we're getting into the green. We got wheat and precious metals. That's our proxy for all the precious metals. 1.1% to the good. Blended commodities 1.6, and that was based on some strength in energy. Energy was 1.6 XLE. Oil 2.3. Oil exploration 2.5. And then a whole bunch of the cryptos, where we got Ethereum 2.6, the VIX 2.8, the blended large cap crypto is 4.8, the Bitcoin Trust 5.2, and now individual companies that did the best, or targets we should say. Devon Energy 5.3, Cliff Natural Resources 0.8, US Steel 0.8. So whenever you see XLB minus 0.44, better than the S&P, but then the steel's much better, that's really where that focused effort on the steel companies can really pay off. So what you want, the sector better than the market and the stocks better than the sector, and then those are the ones that can really pay off, because you know that people are buying those directly, and it's not just inheriting goodness from the sector, although they do inherit some strength from the sector, but it's really people buying those stocks, right? And then just to continue our theme of XOP, the most excellent energy ETF, was really good today. XLE was 1.6, XOP was 2.5, so big winner. All right. Let's take a look at charts from the team. All right, this is from Luke. Now, as you know, as you will recall, for those of you that have been following along with him on his learning adventure these last couple months, he's been doing a lot of work with the 300 tick, 500 tick, 800 tick chart, which is a time variable chart. In other words, every time there's a difference in the price executed on this trade and the previous one, that's a tick. And when you get 300 ticks, it creates that bar and then moves to the next bar. So if those changes are happening fast, why, you could get those things moving out fast. But if it's staying at that one price with no variation, it could stay there a long time, much like a point and figure. And he noticed on some of the indexes that when he went to a standard time flow, that the order flow and the chart patterns were a little bit smoother. And so this week he was going to be working on that. So let's see how he did. So this is CLF. And here was yesterday. Whoops. Let me get the little drawing on there. Here was yesterday's close in that nice tight pinch. And then there was a gap up beyond Z3. Then it starts selling off. When he sees that higher high, lower high, and then it crosses the dragon, this is a great short. Oh, and then you're playing for a return to yesterday's support level where the dragon was, and that's exactly where this thing came to. So he gets short inside here, plays a second position here. Too slow to get the exit here. He should be exiting not later than that second position should be a scratch. So he should be exiting here, which is like a 1, 2, 3 exit inside here. So he nets 0.7, but if he just scratches that one, then this becomes a 1.1 because that extra 0.2 goes here. And so the difference between 0.7 and 1.1 is 50% improvement on his return. So what I want to see him doing is not even taking that second position until he's emotionally committed to that thing scratching. If he gets that much of a gain, he's got to at least scratch that. Until you're ready to do that, don't take the second position, and then just concentrate on the excellent exit on the first position, and then you'll start gaining that 1.1. The stop and reverse is reasonable. He could have added a second position here as it crosses the VWAP, but he waits for the Z3 pinch, and he gets a very nice second exit. The third exit, I like that, and I like the exit much better. And that gives him a 3.1 R, much better. This was a reasonable effort with a micro loss, micro gain, and then a big gain. So once this thing rolls over, he now gets on the side of the angels and picks up another 0.9, so almost 5R, and that should have been 6 with slightly cleaner entries. And then he's noticing it felt very relaxed to trade on the 2 minutes. And this was a guy who felt that the 3 minute was too fast 3 months ago. So that whole idea of if the 3 minutes is too fast, jump all the way down to the 300 tick or the 1 minute. Try to get very smooth on that and speed up your decision making, and then settle on the 2 minute. And then the 2 minute feels very easy, whereas the 3 minute felt too fast. Nice work. Here's Nucor Steel. So this was one of those in the steel area. This is a reasonable effort to the upside. Too late getting out. He should be getting out when it crosses the VWAP. This is where the short should be. And he nails it. At least he gets the stop and reverse. So this should have only been like a minus 0.4 if we're executing correctly. I like waiting for this for the entry here. This is a nice second entry on that next collapsing dragon. He could have taken this support level, brought it over, and said, you know what, I could get short in here, but I don't mind this one. And this exit was a little better. You know, we left a certain amount on the table, but at least we didn't let this one go negative. So I can live with that. He gets the move, waits for this. Oh, no, I'm sorry. He takes this stop and reverse and scratches. Perfect. He gets the kata 2, which is a low, a higher low, and then it crosses the dragon. Perfect execution. Reasonable exit. Reasonable effort short. This covers that, and then he gets on the side of the angels. This one, I don't know. We shouldn't be, if you use standard position size, that wouldn't be a full R loss. Like whatever that position size was over here, if you use that all the way through, you'd actually be happy. But you're letting that get so narrow that even a noise move is giving you a full 1R loss. So once you, in those first sets of successful trades, just use those position sizes, never smaller, so that you don't get smoked in the chop. Okay. Devon Energy was the big mover today. This is as nice as it can be. So we have a slight gap up. He waits to see, so there's the entry, it runs up. He waits to see it hold support. He gets a perfect entry and a great exit, a great re-entry, a nice fractional. Good effort, which, you know, pays for that one basically. A nice re-entry. Nice re-entry and gets paid nice here. So those two wins pay for that loss, and so he ends up with 2.5. And he's moving to no lose plus dinner for 2 quick to lock in profit because of the weakness in the S&P. So nicely played. Here is VXX. This has the look of a Ken H trade. His style, it's almost like he stamps his signature on here now. So what I want you to notice is that there's really nothing exceptional in the daily trade over here, right? You know, this little, oops, come on. This whole region is just like normal chop, chop. So you think, hey, there's no trade in here. But when you drill down and you look at the fractals, you had yesterday's close here. He sees the sell-off and then the recovery. So he buys it with a stop, gets paid, scratches. He was trying to get 2 positions in quick, scratches again, gets paid 1, 1.5, loses 1, gains 1, 3.5 R. How many times a day do you want to take that one? Forever. Every time. Well done. He's small when he's wrong, large when he's right. No losses greater than 1R. And multiple losses better than, or multiple gains better than 1R. So that's how you do that. You manage the left side of that trade. And that's everything from the trades of interest. Thank you, G2. Slow is smooth. Smooth is fast. All right, let's shift to the daily report now. Let me pull that rascal up. Just a second while we get her loaded. Alrighty. All right, we'll go to dashboard 1. We are still in bullish volatile, but you can see we're getting very close to the sideways trigger. We're getting extreme weakness now in the 10 and the 30 day. Like a bite being taken out of our trades. The risk Z continues to be a good reminder of the potential for downside trades, and if that level breaks, we are in for pain and suffering, which is good trading on the short term. So today the S&P and the Qs fired on the overreaction and the channeling, and IEV triggered again today. So that means that we have to be ready for a sharp upside move. We've seen in the past that when those signals fire, especially in the S&P, that has often coincided with large forces spending big money on the index futures, which drives that whole market. So that would be the least surprising effect tomorrow. Big winners: ExxonMobil, Chevron, IBM. Big losers: Walgreens, Nike, United Health, Nucor, and Goldman. Just a handful of dojis today. Lots of channeling and overreactions. 2 5-day down frames: Walmart and Nucor. Lots of auto framers in the stack, ready to go. Notice the big losers today: Microsoft, Apple, Cisco in the tech space. The old school tech getting slaughtered. In the ETF tactical, 3 dojis, lots of channeling and overreactions, plenty of auto framers to choose from. Oil exploration, energy sector, strength in oil, and very little else. The auto framer for swing trading one day at a time. This is essential short-term time frames. There's lots of goodies in here. I leave it to you to work on your framing data. Things that really jump out at me: EFA, Treasuries, held up pretty well today. And I think also XLK and Microsoft, there's a good chance on them moving sharply tomorrow. And I'm always watching Brazil because it's a great fraud candidate intraday. And it's still at 2-1. It may have been like 1.99, a rounding error, which is why it didn't trigger better than 2. No daily squeezes better than 2-1. That just tells you how wide today's ranges were. The Four Seasons being dominated by winter. And a few things in the spring here on the in the Dow and the ETFs. Like I'm interested in Brazil. I'll say it. I'm interested in the Russell just because it got crushed so much. And it was a little better than the S&P today. So when the S&P is in a critical state, I'm tracking signals in both directions so that I can follow price. I don't care which way it goes. I just think it's going to be large. Right? So today, the big losers, Walmart and Goldman. The big winners, Chevron, IBM on ExxonMobil, and ExxonMobil, I should say. Notice the big winners today, all energy. Oil exploration, energy, and Earl. And then the losers, Japan, emerging markets, NASDAQ, S&P Tech, Brazil and Latin America. That should tell you. Continuing weakness in the market. The slope of the 30 is dangerously steep downward. And the further back you look, the worse that even looks in retrospect. Volatility on the climb. Volatility on the climb with the standard deviation of price as well. And clearly, we've busted the bank here on the edge of the river. And now the RL10 rolled over. Its slope is now dangerously weak. The 30 is already weak, and the RL90's slope is back inside the plus and minus 1 sigma. So this was the long, strong bull market. That's officially over. Now that it's back inside the normal slope and weakening, there's no long-term belief in this thing. This is people holding on like a tired cat on a high wire, hanging on for dear life. All right, so let's take that into our preparations for tonight and be ready for tomorrow. Get a good night's sleep, and we shall see you tomorrow. Take good care, and thanks for hanging in there. Good questions today, Luke. Thanks, guys. Welcome aboard, Brian.